Morning, everyone. Let's take a moment and look at the disclaimer. This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyze the markets, how we look at the markets, and nothing should be taken as a recommendation. This is Rod, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top. Well, we will. We do make money in the middle. Okay. It's around 9:07 this morning, AM on the 1st, June the 1st, 2022. And I just want to do a quick morning update. You know, we got a few things we got to watch out for. I know we are waiting on our Bollinger Band, our weekly Bollinger Band strategy to hit. But you know, it's a few things we got to keep an eye on. And I've been telling y'all for the last couple of days. I hope everyone been looking at the other videos that we posted up, because we have a lot of little small issues that can cause a lot of problems. So right now, here's the daily chart of the DIA. Okay, and we have the 5-day moving average in white, the 9-day moving average in green, and the 21-day moving average. So basically, in regards to DIA, we got to look out for this downward trending 50-day moving average. It's at 336. The market closed yesterday at 330.20. Okay, right now, the market is trading up slightly in the pre-market, but we have some economic data that's coming out at 10 o'clock, the PMI, all right, the Purchasing Managers Index. That can be used as a gauge of inflation, the strength of the economy. So we need to be careful. Go to the website, browntradingacademy.com. Go over to the website and look at the blog post that we just put up, okay? We explained a little bit about the PMI, but that's coming out today at 10 o'clock. So the market can do a lot between now and 10 o'clock, but at 10 o'clock, we should have a better idea how the day is going to play out, okay? So, but the 50-day moving average, the downward trend of 50-day moving average is some concern, all right? And we did get a distribution day on the Dow Jones. You see, we got lower prices with higher volume than the previous day. So that's not good, okay? Because we had a follow day on the Standard & Poor's last week, and it's only been 2 trading days since then. Go back and look at the other video we posted up explaining how the market has a 50%, this rally that we in, has a 50% chance of failing. Okay, so this is the Dow Jones structural chart with our trend lines and our horizontal support and resistance levels. Well, we got to get above this weekly level here. This red line is a weekly resistance area, okay, on the weekly chart. And we have these 2 daily resistance lines here that we have to get above. So basically, if you look at the close and the high of last week, okay, we need to try to get above that and get above these horizontal resistance areas, okay? So we got a little work there. We did break out of the downward channel. That was good. We had 2-3 day pop here, but now we're coming into overhead resistance, and we need to be careful. These key levels can cause a problem, okay? Now here's the on-balance volume for the DIA. It's the Dow Jones Industrial Average on-balance volume, and up top here, the green line up top is a line of closing prices, right? This is our line of closing prices, and this is the previous peak right here. This is the previous peak right here. So we put a vertical line across the peaks. So here's the on-balance volume. This is the accumulation distribution line, okay? So notice that prices is pulling back a little bit, but the on-balance volume pulled back a little more, okay? So it's getting closer to its peak. We don't want to see it break back through. This needs to act as support now, just as this prior peak here on the price line, all right, the line of closing prices. This need to act as support now. If prices come back, we need to find support here and rally off. But if the on-balance volume breaks through its support before price, that's not a good thing. That's not a good sign, okay? That can be a sign of trouble ahead. And if you look down below at the blue line, that's the price volume trend. It's also pulling back, okay, close to its support area. So we don't need to see those lines break. Those are volume indicators. Looking at volume at all different ways. Okay, with the price bars, on balance volume, price trend, accumulation distribution. We looking at volume at every different way we can. Now here is the Dow Jones Industrial Average. Of course, this is our chart of lowest, and as you can see, lowest signaled us about 3 days before the follow through day, and she told us that we in a bullish upswing for the DIA. All right, but now prices came back. We hold the support right here at this prior high. That's the same high we looked at just now on the price, the line of closing price on balance volume. But we came back to here. It held support. It held support a little bit. Here's the 21-day moving average, this yellow line, and its conversion right with Lois's blue line underneath prices. Okay, so now we need to see this hold. If prices break back below these levels, break back below lowest and break back below the 21-day moving average and break back below these horizontal support areas, well, that's a problem. So we at some key areas right now. So no matter what the market does, if it does pull back, if the DIA does pull back, if it start breaking these horizontal support areas, if it get below the 21-day moving average and lowers its blue line, that's a problem. If we're still in any trades, we'd definitely be exiting. If we're still in any positions in the DIA at that time, if this happens, we definitely will be exiting, those positions, all right? Because it should not break below, it should not close below lowest at 21-day in this support area on the DIA. Okay, so let's now look at the SPY. Okay, so the SPY looks similar to the DIA. All right, we have the 21-day moving average in yellow. Prices is trading just above the 21-day, but we have this downward trending 50-day moving average, and we did get the distribution. Okay, yesterday, the lower prices on higher volume than the previous day. All right, that's not good because we got the follow through day on the Standard & Poor's. So we had distribution within 2 days after the follow through day. That's not good. Go back and look at the video I did on the 50% chance of failing. This rally has a 50% chance of failing. It's on the channel now. Go back and look at that. So here's the Dow Jones. The Standard & Poor's 500, the structural chart. As you can see, we at levels of resistance also on this chart. We need to get above yesterday's high for sure. Okay, this is yesterday's high right here. We need to get above yesterday's high and come above these here and stay above these prior support, which is now resistance areas, and see if we can make it back up to here. Okay, but we do have that downward trend of 50-day moving average that we need to look out for. All right, so now this is the on balance volume for the Standard & Poor's 500 on the daily chart. Same thing is with the DIA. We don't want to see it break back below its prior peak. So right here is the prior peak for the DIA. Right here, this is the prior peak for the DIA. Okay, of the line of closing prices. This is a line chart of closing prices. So we got above it. That was good. We're coming back. We don't need to break back below this. We break back below this high, that's a problem. And now if on balance volume breaks back below its high, it's a real problem. So we don't need to see that. Same thing with the accumulation distribution line and the price volume trend down here below. Okay, the blue line. It has already broken back below his high. So that's not good. But the other two, the on balance volume and the accumulation distribution line, we got to see if they're going to do the same thing. Okay. If one of the other two do the same thing, that's a problem. So here's the SPY. Here's the SPY. Okay. This is a chart of lowest on the SPY. And as you can see, lowest been signaled a long time ago. Lowest signaled. Okay. That we had a new start of a new upswing. All right. But right now, lowest. The blue line of lowest is starting to come and converge right with the yellow line of the 21-day moving average. The yellow line of the 21-day moving average. If we break back below this, that's a problem. So all of our stops is going to be right here. Okay, we a little below that rather. Okay, but if we close below, if we start closing below the on the closing basis, let me clarify that. Our stops are going to be below these levels on the closing basis. If we close below these levels on the closing basis, that's a problem. Okay, she should not close back below lowest. The 21-day moving average line should hold as support. Start breaking that, that's a problem. Okay, that's a clue that something could be going wrong. Now here's the QQQs. The one thing that was good about the Qs, the triple Qs, the ETF that tracks the NASDAQ 100, is that when it pulled back yesterday, it pulled back almost to the penny of the 21-day moving average. Okay, but the 5 is across above the 9. They both was heading toward the 21-day moving average. But when it pulled back right to the 21-day moving average and bounced. Okay, well, we need to see if it could get above and close above yesterday's high. Okay, that could show us some signs that it want to continue to follow through and move to the upside. Keep a close eye on this downward trend in 50-day moving average. That downward trend in 50-day moving average is an issue for all of the major market ETFs. Okay, well, the major market, the index, the ETF that tracks the major market indexes. Okay, that 50-day moving average, that downward trend in 50-day moving average is a problem. Now, the other thing for the Qs, now, okay, we found support at the 21-day moving average. We saw that. But we have these overhead resistance areas that we need to get through on the daily chart. Okay, we need to get through all of that. So until we get up here above 320, okay, we could have some problems here because this is some area of a lot of overhead resistance. So if we do take a position in the Qs, just be aware, okay, that you have a lot of overhead resistance here and it needs to get above that 320, okay? That 320 area, it has to get above this area here to come out of all of this overhead resistance right here, okay? Have a lot of overhead resistance. We got these downward trending trend lines. Hopefully we can stay above that at least, definitely. And we have this other internal downward trending trend line coming across here. All right, if you can see this blue line coming right across here. All right, that's another downward trending trend line, but in this lining up right with these other horizontal resistance areas. So we got to get above all of that. So we have to be careful on the Qs. All right, and here's the on-balance volume. As you can see, here's the peak. Okay, here's the peak. All right, for the on, but here's the green line, of course, again, is the line of closing prices up top. It's pulled back a little bit, kind of testing that previous high right here, kind of testing that previous high right there a little bit. We saw that with the 21-day moving average, but this is the problem. Here's the prior peak. Notice the on-balance volume from the QQQs never got back up, never got above it. Okay, on the accumulation distribution line, yes. Price volume trend, we got above it a little bit, but it's coming back, okay? Coming back a little bit. But the on-balance volume never got above it. That's not good. We need that on-balance volume to get up there to show us that the volume is coming into the Qs. And here's the chart of lowest, all right? Here's the chart of lowest. And we're well above lowest's blue line. That's great. We hold support right at the yellow 21-day moving average. We held support right at the yellow 21-day moving average, and we well above lowest's blue line. That's great. If lowest blue line continue to trend up, we stay above that, we're going to be okay. We start breaking below lowest, problems. As my mentor say, problems. All right, be careful. Here's the IWM. Okay, we right above the 5-day and the 21-day moving average here. You can see the white and the yellow line. The 9-day moving average is trying to get above the 21-day. Okay, the 9 is trying to get above the 21. That'll be a very good sign if we get that crossover. All right, if the 9 gets above the 21, but that'll be a very good sign. Okay, very good sign. So let's look at the IWM on the structural chart. As you can see, we came right upon this long-term weekly trend line, right at the highs of yesterday. Okay, we tested that and we pulled back. We closed right below this daily resistance area, but we found support at this internal trend line. See this internal trend line right here? We found support there. That's good. Okay, so good we found support, bad we found resistance at the weekly, longer term resistance area on the weekly chart. Excuse me for that. The resistance area on the weekly chart. It's good we found resistance there, but I mean, it's bad that we found resistance there. Hopefully we could have got through that, but it's good we found support at this internal trend line. But the Qs need to get above yesterday's high. The Qs need to get above, I mean, the IWM needs to get above yesterday's high, and they need to get above this weekly long-term resistance area. Okay, so we have to get above that. Now here, this is uh, the on-balance volume analysis of the IWM. You see we got the green line is the line of closing prices. It's starting to pull back, but it is above its previous high. So that's good. If the line of closing prices stay above that, that'll be great. We don't want to see this. We definitely don't want to see this. The on-balance volume line is trying to break back below its previous high. That's not good. That's telling us that volume may not be coming in like we need it. Okay, we need that to turn around. If that continues to trade below its previous high, that's a serious warning sign. Accumulation distribution line is pulling back to its previous high, but it's still above it. The price volume trend below is breaking below it. So 2 of the 3 line of volume analysis that we do are telling us that volume is coming out of the IWM. So we need to be careful. So we got the IWM right here with the moving averages. It's holding support at the 5, the 21 day, the 9. It's above all that. Okay, that's good. We got the structural chart. We found resistance right at the long-term weekly resistance area for the IWM. Okay, we found resistance there, but we found support at the eternal line. But this is bad. We're breaking this previous highs. Not good. Okay, for lowest, look what's happening here. The lowest blue line is right at the 21-day moving average. We break below that, with that volume coming out, I think I won't be in the IWM for sure. Okay, so here's the ITOT. This is going to be the last one we look at. So look at ITOT. We got the 5 crossing above the 21. We got the 5 already above the 9. We sitting just above this key support area here. That's support. We start breaking below these 3 moving averages. That's not good. Okay, here's the prior high from yesterday. We need to get above that. Okay, today we need to trade above that, because if you notice, look right here, the prior high for yesterday is right on this red line of resistance. That's a weekly longer term resistance level. We're right on that red line. Okay, so that's why I said we need to get above yesterday's high. So for all of the indexes, really, you notice that the thing that has in common, we're trying to get above yesterday's high. Okay, so and those yesterday's highs, which is pretty much almost equivalent to what was happening last week at its closing prices, okay, where we closed on the weekly chart from last week, we need to get above these areas, okay? If we can't, that could be a problem. So this daily chart, the ITOT, is telling us we did find support at this internal trend line right here. We found support there. That's good. We found support at this internal downward trend line, but right here. But these highs, we got to get above that, okay? So we need to get above 92, getting above 92 and some change, and start working our way up, all right? So now let's look at this on-balance volume line. So the on-balance volume analysis, of course, the green line up top is our line of closing prices, right? Our line of closing prices is still above, pulling back to its previous peak, but like the rest of them, we need to see it stay above its previous peak. But at least the on-balance volume is not breaking down below its previous peak here. It's not breaking down, and the accumulation distribution is not breaking below its low like we see on the IWM. So the IWM is telling us that volume may be coming out. So the one that we definitely is going to have to avoid for right now, we're going to avoid it here at BTA, is going to be the IWM until we see that volume change, okay? Now, here's the chart of lowest. Once again, lowest is, this is kind of a good thing, because you notice that lowest is starting to get right close to the 21-day moving average on all of the major index ETFs. So lowest and the 21-day moving average is coming together. So that's our key support area right there. We start breaking that, it's going to be a problem. If we start breaking below that, that's an issue. So that's it for our daily charts, analysis of the daily charts. We'll do another video in a few, or later on today, looking at how the weekly charts are playing out, okay? So the next video, we look at the weekly chart. You see what's going on in the daily chart. That 21-day moving average is the key, and it's coming right next to lowest. That's wonderful. So if we are to take a position in any one of the major ETFs, okay, according to the Bollinger Band, the weekly Bollinger Band, we're going to be stepping down, like we said before. We have to adjust the strategy. We're going to be stepping down to the daily chart using the 21-day moving average, the beautiful thing is that lowest and the 21-day moving that's out there. We got recession fears, the war in Ukraine. There's a lot going on. Anything can tip this market into a tailspin. So we have to be careful. We have to keep an eye on everything. This rally has a 50% chance of failing. That's facts. I hate to say that because I want to see a rally, but it has a 50% chance of failing. So we have to be careful. Go back and look at the video of why the rally has a 50% chance of failure. That is a good lesson, something that's good to remember for the future. There's going to be plenty of times we're going to see this again. And that 50% chance of failure, it's a possibility that it ain't no possibility. You're going to see that same setup time and time and time again. So you need to know it, write it down, memorize it, keep an eye on it. It can save you a lot of trouble in the future. Okay, until the next video, look out for the next video. We're going to be analyzing the weekly charts. We're not going to do the daily charts anymore today. The weekly chart, the weekly levels, and the Bollinger Band strategy is what we're going to weekly Bollinger Band strategy is what we're going to be looking at. That's what we're going to be looking at for the remainder of the day. Okay, so take care, everybody. Look out for the other videos.